What's up, you guys? Welcome back to the channel. My name's Nick, and in today's video, I'm going to be showing you 4 reasons why I think the stock market is going to crash this year. I've done some in-depth research into our current markets and everything that's going on in the world, and at the end of this video, I'm going to share with you whether I think this is going to be severe or minor. Let's start with the basic statistic. On average, about every 2 years, the stock market drops at least 10%. Since 1950, on average, stocks have fallen about 20% every 6 years. And there's only been about 5 times in history that stocks have fallen about 30% or more. So what does all that mean? That means that stocks dropping is a pretty normal thing, just about as normal as me eating tacos. Except instead of every 5 years or 10 years, it's like every week or 2. But every time that stocks drop, there's usually different reasons why that happens. So I've done some research, and I'm going to be sharing with you 4 reasons, things that are actually going on today in the world right now that I think could cause the next stock market crash. We're going to be talking about 4 areas of our economy. One is going to be business activity, what businesses in the United States are doing right now. The second thing is the CARES Act, all the stimulus money that's out there. The third thing is mortgages, and the fourth thing is auto loans. So going back to the business activity that is going on right now in our current markets. Over the last 4 months, retailers all around the United States have actually been seeing drops, anywhere from 20 to 60% in revenue. So why would that matter, and if there was going to be a crash or not, coming up this year or sometime next year? Well, it's as simple as this. Every time that a dollar is spent, it typically travels through the economy about close to 6 times. So let's just think about it this way. In simple terms, if you have a dollar and you go spend it at JCPenney, what happens to that dollar? Does it just go in the coffin, that little register, and lay there forever? Well, typically, that's considered revenue. And with that revenue, you have to pay your employees, you have to pay your utilities, you have to pay your rent. The employee gets it, and they might go to McDonald's and spend it at McDonald's, and then McDonald's will pay their rent, and that guy might buy a car, and that guy that bought a car has a car salesman, and that car salesman might go on a vacation in Texas, and this might all be happening in Florida. So now you have money traveling all over the place, and this is how our economy works. So when money's not being spent in our economy, that means things slow down drastically. Because just as fast as that whirlwind can go up, or that dollar that gets put out there gets spread among many different companies, the same thing happens is you can see a decline. When that dollar isn't spent, that means a lot of people aren't getting that dollar. An article from Forbes suggests that 50% of all travel-related jobs could be cut due to everything that's going on in the world right now. There's a lot of fear in traveling right now, so nobody's doing it. And if there's not a lot of dollars going into travel, if people aren't buying plane tickets and staying at hotels, then they'll shrink back their workforce, and there won't be as many people working. And if those people aren't working, they're not spending money. Or are they? Now, it really just depends on who you talk to. There's a lot of economists right now that are predicting that we're going to have a very strong third quarter and fourth quarter. And to me, this makes absolutely no sense. Seeing that a lot of businesses are shut down, not operating, there's still tons of people laid off. I don't know how they're coming to these numbers, but maybe they know what they're talking about. How is it possible that businesses are going to do better in the third and fourth quarter if nobody's spending money? Well, it might be due to pent-up demand. The saving rates are as high as they have been ever since 1981, and I believe that is due to the amount of fear that is in the markets. Credit card usage has dropped. Savings are up. What does that mean? People are spending less, but that also means that they might have more. If a lot of people are sitting on cash waiting for all this stuff to get over, it could be a big boom into the economy once things look good again. All that money that has been hoarded is probably going to be out and spent and invested, and all at once everything will start to reopen and it'll be good for the economy. However, that's just one theory. There could be something a lot more grim in the future. So let's talk about the stimulus money. The CARES Act was a whopping $2.2 trillion of money that is flooded into the U.S. economy. So what does that mean? That means that businesses were bailed out. $267 billion got paid out into direct payments to Americans. A whole bunch of different programs are funded. State and local governments got a lot of money. A lot of money went to hospitals and all sorts of things like that. And what this means is that we're kind of seeing something false in the economy. When you have a bunch of debt, I want you to picture it in your own life. You're just making your normal $40,000 a year, $50,000 a year, but then all of a sudden you show up to work in a $30,000 brand new car. How did that happen? Well, you took out a loan. You didn't have the money to pay for it. You financed it. And what the government is doing right now is they're basically financing America. They're just giving everybody money, taking out a bunch of debt that we'll eventually have to pay back in taxes later on. And what this is doing, this is making things look good. That's why you might be seeing the stock prices going up, because all this money got injected at one time. All this money that's being injected right now into the economy is a good thing for right now. But what happens 6 months from now when businesses are still shut down and nobody has any money anymore? As of right now, the CARES Act is giving an extra $600 per week to people that are laid off and collecting unemployment benefits. And that's across all 50 states. And this is set to end on July 31st. As of right now, there's about 36 million people that are collecting unemployment. That's one of the estimates that I read online. So what does that mean? There's 36 million people that are getting on this unemployment benefit of an extra $2,400 per month. And if those people don't have jobs to return to on July 31st, what do you think is going to happen to them? What do you think is going to happen to our economy? Do you really think that they're going to be able to keep purchasing the things that they're purchasing or paying their bills? I don't think so. If at the end of July 31st, the unemployment rate drops back down to the 3%, 4% that it was at before, I think we'll be okay. I think that we are in for a rude awakening if we think that things are going to be looking great in the third and fourth quarter, and even the first and second quarter of next year, if we cannot get jobs back up and running and the economy moving. Because what's going to happen is the third and fourth quarter are going to come around, that stimulus money will be out, and people won't be able to pay their bills. And if people can't pay their bills, they're not going to be out splurging and spending in these areas that people are expecting will be doing good in the third and fourth quarter. The third thing I wanted to talk to you about is mortgage defaults. In the CARES Act, there are certain provisions for mortgages to where you could actually go into some sort of forbearance and not pay for the next year and all that stuff. And that might seem fine and dandy for now, but what does that actually mean? Who pays that? Because this is how it works. A loan was given to a person that gave a person a loan, that gave a person a loan. And a lot of times this is investors at the very head, at the very top of all this. The monies are given to the banks, and the banks give the money to us, and then we don't pay? We don't pay for a year? So then, do they not have to pay for a year? And then what about that person that's supposed to collect that money? This will trickle down, and it will, trickle up, and it will not be good. I'm predicting that we'll see a lot of foreclosures if, and only if, work doesn't resume. Then there's auto loans, and then there's like credit cards and personal loans and all these other loans. And all these are spiking in huge numbers. They've gone from 2% default rates up to like 7 and 8% default rates. That is not good. People are over leveraged in this country. People have too much debt, and they don't know how to repay it in this time. Everybody in this country kind of acted like nothing crazy would ever happen, and they're just over leveraged and they owe money on everything they own in their life, and you take their income away, they can't pay for those things. And what's going to happen to them? They're not going to be able to pay those things. Those things are going to get taken away, and that's not good for the economy. Debt needs to be repaid for the economy to keep flowing. You can't just take out more debt to fix the debt problem, because then you just get deeper and deeper and deeper in debt. And the farther you go down that hole, the dangerous it gets, and the harder it is to get out. And this is why I think things like the CARES Act can be extremely dangerous. Now, I am not an economist, so I cannot assure you that with my master's degree in economics that I know what is going to happen, because I don't have one. I'm just a kid that has a YouTube channel, and I like to read about this stuff online, and I have opinions that I like to share. What I'm telling you now, though, is that our national debt is now up to $25 trillion, and those debts are paid through taxes. And if people aren't working, there's no taxes coming in. This whole system of debt has to be running on a perfect wheel, or it won't work. So what are my thoughts after hearing all this information that I've gathered? My thoughts are very two-sided. On the one hand, if everything starts to open back up and gets back to normal, I think we'll see growth. I think we'll see people pushing forward. I think we'll see spending. On the other hand, if these programs end and people aren't back to work and we have to take out more debt to fix the problem, we're really screwed. I think we'll see a huge downturn in the market. But remember what I shared at the beginning of the video. Of course there's going to be a crash. There always is. Like I said, about every 6 years, there's a 20% dip. Every 2 years, there's about a 10% dip. There will always be a crash. Will it be big or will it be little? Well, nobody really knows. Now, the question that you're probably all wondering is this enough of a concern to actually take your investments out? Well, I don't think so. I don't think that anybody can really predict when things are going to hit the fan and then when they're going to go back up. I just don't really think anybody can do that. So my recommendation is just to stay in long term. You're thinking long term here. If you're investing in stocks for the short term, you're going to get bit, you're going to lose. It's like gambling. But if you're in it for the long term, statistics show that over a very long period of time, since the inception of the S&P 500, it's averaged 10% year-on-year returns. So that might mean 1 year it's up 50%, and the next year it's down 10%. You're going to lose some years. But overall, over a long, consistent period of time, you're going to make money. Just stay in, just hold on, keep investing, keep saving, stay out of debt, stay away from debt. It's not necessary. Just save money, invest, build wealth. And if you do those things, you'll be okay. But don't be over leveraged in this time. Please do not go into any more debt than you already are at this time. That's a really stupid thing to do right now, given that everything is so uncertain. What you should be doing is you should be piling away a nest egg just in case things go wrong. Keep spending as normal. If your job is normal, obviously, if you've lost your jobs and you're on unemployment, you should be looking for new work and making sure you're saving a sizable nest egg away to be able to pay for your bills and feed your family during the many months to come ahead. If there's any questions you guys have about personal finance, about budgeting, investing, managing money, please comment down below. I want to know how I can help you. I make these videos to help educate you guys about finances, what's going on in the world. So if you've enjoyed this content, what I want you to do is I want you to like the video and I want you to subscribe. When you subscribe, it makes me happy because I know I'm helping more people. And then you get to stay up to date on all of our content. So as always, guys, I hope this has helped you. I hope this has blessed you. And I hope you guys have a great day. See ya.